God bless everybody today. It's October 3rd of 2021, and we're going to go back and look at all of the different aspects of why I believe the markets are going to melt down by the end of this month. I've been talking about this for about 6 months and how Bitcoin and a number of things are affecting us and how we're walking into a perfect storm with the debt ceiling. Powell through the Fed is going to stop tapering or start tapering, and they're going to have to probably increase interest rates faster than they want to because of inflationary and other things. But let's look at a number of things that are affecting us right now and why I believe we are walking into a potential meltdown by the end of this month. As you can see in this MCU Times article, which was just posted yesterday, now, I've said for a while that I thought we could see a 30 to 50% correction in the market. Now, that includes a drop in the market on average through turmoil and stuff that we've been seeing. We can watch the market start to decline, but then you're going to get an actual drop in the market, which will add to that decline, which will potentially make it 50% or even higher, and some experts now are coming out saying that it could potentially drop the S&P 80%. Now, David Hunter has been in this for a long time. He's been out here for a long time, and he is now indicating that there's a potential sharp drop in the S&P futures and that this could be basically setting us up for a crash. There's so many things that are affecting us right now in this market and what's going on. And on top of that, we have the COVID pandemic and some other things that are affecting us. We're walking into flu season. That's going to spike the COVID. We see an R1 variant that's come out. They're trying to understand. Delta is still the main variant out here, so we have to keep an eye on that and how that's going to basically mutate and change potentially into something even worse. Hopefully not, but it's potential, and it seems like this one only seems to get worse, and it's been walking through most of the age classes at this point. So it's affecting everybody, and it will affect everybody before it's done. One indicator that I've been talking about is the 10-year bond rate and how it is rapidly climbing up to 2%. Now, some of the experts are indicating that it could be at 2% by the end of this year, and it could jump up and potentially be 2 to 3%, depending on how harsh this gets. The reason the 10-year bond rate matters is that when it hits 2%, we have to start to look at inflationary problems that we're having in the country and the world that aren't transitory, as they keep telling us they're transitory in nature, but they're not. They're persistent, and they've been persistent for months. Transitory usually means a short period of time and then it corrects itself. And this isn't correcting itself, and they're lying to us about how transitory this truly is. But the bond rates jumped approximately 20 points in a matter of a week, 10 days. And that's massive. It went from about a 1.35 to about a 1.55. And like I said, it's going to head up to 1.75 and potentially hit 2 by the end of this year because they can't control inflationary problems. They've got so many issues out here right now. People aren't going back to work. And the two mandates that the Fed, Powell, has always indicated is that they need full unemployment and they need to run at inflationary rate of 2% or higher. So we haven't hit 2% or higher in like forever, but that's coming because now they've placed all this pressure on the market. And full unemployment with potentially 5 to 8 million people out of work, with them bringing back around 235,000 workers a month, is going to take a long time to fill employment to a full level again. And so they're not being honest in how this is going to happen because they can't get to full unemployment with those numbers, at least in this administration, unless they change something and we have a major rebound to get us out of this. So that I just don't see happening. So watch the 10-year bond rate. As it climbs, that applies pressure to the market. And it also applies pressure to inflation, and inflation climbs, and then your paychecks aren't worth as much because everything out here costs more. Fuel, food, everything that you need that they don't add into their inflation is being affected right now. And with people not being able to go back to work, schools are shutting down, so moms can't go back to work. And that's one of the biggest sectors of the economy that's being affected right now, or the women that can't get back into the workforce because the kids are at home and the schools are shut down. And that is a major factor of what's happening out here. And that's one of the reasons we're not at full employment. The other thing is a lot of the older people are not coming back to work. They either thought they have enough retirement not to come back, or they just won't due to their age and they're afraid to come out into the COVID environment. So they're not wanting to go out. They don't want to be vaccinated because they don't necessarily trust the government. I haven't been vaccinated. I don't want to be vaccinated. I want that to be my choice and not mandated on me. But I quarantine heavily, and so I rarely affect anyone around me. And so it depends on your practices. If you're going out and you're not paying attention to protocols, then you're going to affect people over time, and potentially, we're all going to be infected over time. But you don't want to transmit this to other people. We're talking about moral hazard here, and this is a topic I've talked about a number of times, is moral hazard. Your decisions that affect others in the end times and how that's going to affect your soul. If you make bad decisions that affect others adversely because you're not thinking straight and you're reacting to knee-jerk in whatever's going on at that moment, and you haven't planned well, then you're probably not going to do well and you're going to fail. So it's important that we fill our oil in our lamp and we get everything ready, because the storm is here and we're not in the eye of it. It's just about ready to hit. It's going to be a long storm of about 6 years. So let's see what else is going on out here that's extremely important to what's happening to the economy. So one of the most important things I think happened this week is we saw Janet Yellen and Powell come out with the Fed and basically try to explain how this is all going to turn out. And Powell basically came out and said that we're going to have to start tapering by the end of the year, within probably the next month or two, and that they would do that until the middle of next year, which means they're going to stop buying all these bonds and treasuries and finalize this madness of spending trillions that they're adding to the federal balance sheet. Now, they have about 8.5 trillion in purchased bonds and treasuries and things that they've been buying over the last year and a half. And so their balance sheet's gone up tremendously. Powell says he wants to start to taper because the economy is starting to come online, and what they've seen is basically it's fallen in line with his estimation of where we should be. And so now we should start tapering, and that when we're done with that at the middle of next year, then at that point, we would then be able to start raising interest rates. Now, they can't raise interest rates until the tapering is done because they have to liquidate all of these bonds and treasuries that they've purchased before they raise rates, which adds to the debt that they're adding to us in the debt ceiling and the talk about stimulus that they're presenting right now on the floor of the House and the Senate of 3.5 trillion to 5 trillion additional spending on what we've already spent the last year and a half. Now, the debt ceiling right now is around 28 to 29 trillion. But if you add this additional money onto it, then we're working into the 30 to 35 trillion. And so there is a point in time where you're so debt to GDP ratioed out to the point where right now we're at 105% debt to GDP ratio, which means we spend more money than we actually have every year, and somehow they're going to pay for this. Yellen just said, in her own words, that this was already paid for. But yet, if you go into and ask her the next question, she says it's over 10 years. Well, then how's it already paid for if it takes 10 years for you to figure out how to clear the books, and that's through what, another administration or two? So you're affecting these administrations a decade out, okay? And so that applies pressure to the next administration so that they have to make choices based on what these people have done prior. And that's not fair to any administration. I don't care what side you're on. So we need to basically do what we should be doing and figure out how to stop spending. Because every time you print money and deflate, basically what you're doing is you're basically placing the dollar into a position where it's not going to be worth anything. Because the more dollars you print, you get to the point where the money's just not worth anything. There's so much of it out there. As our inflation goes up, this will affect everything from your loans on your cars, your houses, anything that you have outstanding credit to. The banks have to absorb this, and so they're going to pass it through to you. And so inflation on all levels are hitting you. Food, gas, loans, things like this are all going to start to go up, and your inflation will outweigh any income increases that you get. So your wage won't keep up with the inflationary environment that you're in. Also, I believe the Fed's a little behind because they're always behind, and it takes a minimum 12 to 18 months for the Fed policies to work through the system, and you actually start to see some major effect of what they're doing because it's not transitory. It takes time. One thing that we've seen here is that about a dozen different countries have started already raise their interest rates, which signals to me that these countries are understanding that there are already problems going on in their economies. They're not doing this massive purchase of bonds and treasuries, and so they're already in the process of raising their rates, and we're a year behind them, basically. So will the Fed, once they get to a position where they can sell off all this stuff and then start to physically raise rates, not bonds, rates, he's talking about the middle of next year, August. So we're walking into about another year before he can even start this. And he can't really do this until they sell off everything. So there is a process. If he raises rates prior to this, then the treasuries and the bonds that they hold are going to basically be affected. So as you can see, South Korea has raised their rates, Norway's raised their rates. I believe Russia has raised their rates, a number of different countries. I believe almost 12 different countries raised their rates effectively within the last few weeks. So as we start to see the global economies struggle with inflation and other things, keeping the COVID at bay, trying to get their economies online, they keep saying leisure and travel and all these things are coming back up, but you're walking into a major flu season with a variant that isn't under control. The vaccinations are not there to keep you from getting the disease because that is not what they do. They help alleviate the symptoms. So for them to say that you aren't going to get this disease because you get a vaccination is just purely false. Everyone will get this. It will get through the system. And as much as I hate to say it, we will all be impacted before this is done. And they will never eradicate this. They want to make it like the flu, so it's endemic over time, and so we can say, well, we had a disease and now it's like anything else that we used to have that we can control, and so it's not a problem anymore. But they're a long way from that. The stock market had a major fallout. Let's go to that article real quick. Now, normally I wouldn't get too deep into the COVID thing on the market thing, but it is affecting us quite tremendously out here, and how it's affecting everybody's lives daily. And so it's affecting the markets because we can't open up the economies properly. We're relocking down certain economies. Certain sectors have never come back up to steam and probably may never come back to steam. But one thing that happened this week that I thought was extremely important is they came up with a pill that says that this would cut down on the hospitalization and deaths within the COVID variant. It's not something you can take that will keep you out of the hospital, but it will help if you are hospitalized. And so this sent shockwaves through a lot of the pharmacies in the stocks because they all fell dramatically due to this information. And so that's one of the turbulence we saw in the market this week, and why some of these sectors fell pretty heavily is that they brought this pill out, indicated that it's always a miracle pill. There's always something that's going to make everything better. This is not what that is. This is not a cure-all. This is just another way to fight all the systemic problems we have within the COVID pandemic itself, and it just gives them one more tool to hopefully help people that are, sick in the hospital so that they can get out faster and not be affected by this disease any more than they have to be. On the global front, one thing that's affecting us on the markets is the Taliban and how Afghanistan is basically falling apart in front of our eyes. This morning we had a major bombing in Kabul at a mosque to one of the Taliban's heads. There was a ceremony going on, and they decided to blow it up. And so this problem in Afghanistan, which is inflaming the whole Middle East and part of the Ezekiel 38-39 prophecy of how Iran, I said, is going to fall probably within the next 6 months, is a problem. Because if Iran were to fall, and I'm not talking about this month, I think the market crash could potentially happen this month, and we'll get more into why that's going to happen. But I do believe this will weigh on the markets over time. They do not have a solution for this, and it's basically converting into Sharia law and just pure madness over in Afghanistan. And so you want to pray for those people over there, and, just be thankful you're not in that situation. Like I say, when in my situation, I'm in a fairly good place, so I consider this a quiet day, and my life moves forward. In these cases where these people are either on the run, have no homes, or running from evil people and things, you need to think about those people and realize that your situation's not so bad most of the time. So. But do realize that the international situation over in the Middle East is going to impact us as we move forward and we watch this start to disintegrate. I've always said you need to watch Turkey, because Turkey is an extremely important part of this prophecy. I believe Erdgoan is the white horseman. He's not the Antichrist. The Antichrist will come later. Through this destruction of Gog in Ezekiel 38 and 39. And if you want to go check that out, I have articles about that. So Turkey, the economy is a mess. We're getting to the point where they're one of the worst economies on the planet right now. The lira has hit a record low against the dollar. They've had to reduce, then cut their rates because their inflation is spiraling completely out of control. Their lira is worth, I think, like 11 cents to our dollar. So they just don't have any buying power. And I believe this is a catalyst. One of the catalysts, I believe, Erdgoan has to start to move in the Ezekiel 38-39 prophecy, is that he will have to find a way to change the dynamic of his economy as it's failing. But as you can see, his currency is retreating. It's worthless, and the economies are failing over there tremendously. And so Turkey is going to have to figure out how to fix this problem. And his ultimate fix will be expansion. He'll expand into the Middle East. And that's what Ezekiel 38-39 is telling us. So keep your eye on Turkey and the lira, because the lira is affecting this country tremendously. And Turkey will affect the world tremendously before he's done. So one of the major problems that we're having is the global supply chains are being basically disrupted, or they're basically just piling up and not moving. Okay, so a lot of this containerization of ships and things like that are just sitting out in the ocean. They can't get them to the ports. They can't get the products off. And your price of a container has gone up dramatically. It used to be, $2,000, $3,000, $4,000 to ship a container of items to the United States from China or other places, and now they're talking up to $24,000 per container to ship items. That has to be passed down to the consumer based on the breakdown of the container, based on the parts that are on there, and divided by the cost of the container. All this has to be dealt with, and it's going to be passed on to the consumer. But we're going to see major shortages and different things coming up in the next few months. So the globe is in a mess right now on a number of shortfalls that we're having, especially in semiconductors or chips for cars or electronics or anything like that. So companies are having to decide what products to basically build, whatever demand is the most highest and the highest profit margins are the ones that they're going to build. And so other things are going to get left behind, and you're not going to see products on the shelves due to they do not have the components. If they don't have the components also, this is going to deal with manufacturing shutdowns, because the manufacturer themselves, if they can't get the components, will basically shutter their doors and say, look, we can't build the parts because we don't have them, and we can't give you these products, and we're walking into Christmas season. So a lot of things are going to be really, really hard to find by Christmas this year. Things just aren't going to be on the shelf. A lot of things just aren't going to be found. And so as the New York Times says here, you better get used to this. This isn't going away. So we need to understand that if you're going to stock up on things and get your oil in your lamp, you need to do that early, okay? Before inflation hits you, you need to stock up some things in your home: food, water, medicines, vitamins, warmth of clothes. You're walking into winter, so what happens if we have a major grid failure, or some people are talking about an EMP potentially, which I don't know if that's going to happen, but we are having major energy shortages and problems of supply to the pump, especially in the UK and different things like that. So you want to make sure your tanks are filled early on your home. If you need to supply yourself with natural gas or some type of fuel, you need to make sure that you have a lot of extra food. And I'm not a huge one for high-end survival foods. You can go out and buy canned foods all day long from the supermarket, store that stuff forever, and you'll be just fine. Now, in the UK, they're having a major shortage in fuel. It's not really a shortage in fuel, though. It's a shortage in the amount of truckers that they have that can transport the fuels around the countries. 18,000 less truckers due to the pandemic. So we're being affected on the transportation side due to people aren't either going back to work to drive, or they've lost their jobs due to companies have stopped and gone bankrupt or gone out of business or whatever. So they literally had to bring in the National Guard and the Army. I don't know if they have a National Guard in the UK, but the Army or the British, UK, all these people had to come in and start moving fuel around to effectively keep these people in a good place. But there is going to be energy price problems, and one of the problems that we're having right now is we're looking at a surge in the actual barrel of oil itself. So if you look at the Brent price, you realize that we're at around $80. That's about twice what we were a year and a half ago before the pandemic hit. We were around $40, $45. Actually, it was about a year and a half ago, we had a major spike down in the oil, went to negative 80. The VIX went nuts, and we had this massive problem with supply and demand. This could be another problem over time, because if the global economy shut down and they aren't using oil, then they will start to build surplus again, and the price will have to probably come down because they can't charge $80 for no demand oil, and it's oversupplied. So as the Bible tells us, the oil and the wine will not be won't have any problems with oil and the wine. You're going to have problems with food and other things, but he will not harm the oil and the wine. So we will see plenty of that. It will never go away. And one of the problems that we've had in the infrastructure of oil is that since we've gone to sustainable green energies, we've taken all of this monetary money that we would have put into infrastructure and oil and fossil fuels that sustained us for, hundreds, if not thousands of years, and we moved it into green. And so we now have a disintegrating infrastructure in the oil and fuel industry of fossil fuels. And so this is affecting us. We're also being impacted by a number of hurricanes and different things, which are affecting the supply chains, and it's shutting down refineries here in the United States. And so this is all impacting us in a lot of different ways. And all of these different pressures are now building into potentially a default in the government itself in this month. So let's go look at that, because that might be the catalyst that really starts to change this picture. So one of the major factors that's going to affect us is the debt ceiling that's supposed to happen. They have to make a decision on the 18th. They either have to suspend it so they can keep the government moving, or they have to raise it. And right now, they do not have the votes to do this. The Republicans are fighting them tremendously because of the careless free-for-all spending on a lot of poor projects of social issues and things that really don't need to be in there, and they should be addressing the matters that affect us the most right now. And so they're going to either have to cut this package back from 3.5 trillion tremendously, I would say about in half or more, before anyone will actually walk into the room and agree to this. But this is causing a real problem, because if they can't figure out how to get the debt ceiling passed, one of two things could happen. We could either default or we could actually miss a payment. And both of these could potentially downgrade the United States, which would impact the markets tremendously if that were to happen, because it's never happened before. So for us to default on a payment, be downgraded as a country, as a world currency, that's a bad sign, because now you're getting to the point where the dollar may not someday be the world currency. And so what would that look like? Well, it would be either another currency or potentially a cryptocurrency. So that's something we have to look at as we move forward in how they're going to deal with this. Now, all of these culminating factors are coming up to the weekend of the 18th, or around the 18th in this debt ceiling. And so I believe we are going to see that week extremely turbulent, walk into the weekend. I believe that next Monday open could be extremely harsh. Also, I wanted to add that the 18th is a Monday, and so the debt ceiling will come due. They'll either default or miss a payment on that month. You know, they're going to get to a point where by the end of the month, they're going to run out of money. So something's going to break, or they're going to either have to come back at the last minute like they always do and try to figure out how to fix this thing. So, but if you go out and look, I think between the 18th and that Monday following is going to be extremely important. Also, I believe the crypto markets are affecting everything. Bitcoin has been bleeding out since May. I've been talking about this. I've done a number of videos. We're not going to go in this too deep, other than I wanted to show you the chart. This is Kraken's charts on Bitcoin, and how you saw how we went up to that top resistance point, actually extreme top resistance, the 52,900. So went up, tested that high level up here, then it came all the way down and came back below 40,000 and tested that bottom support, and now we're rising back up. But I still say we're heading towards the spring, and a lot of people may disagree with me on that, but I believe as we walk into the end of this month, as the debt ceiling starts to come into effect, the government may or may not shut down. I believe it's still going to place a lot of pressure on the markets if they wait till the last minute and they show that the government is basically inept to do anything at this point other than basically struggle. We're going to see the markets really start to turn down. Now, the markets have already been turning down over the last week and a half. And so by the time you take this accumulation of drop on top of potentially a major correction, you can see that 30 to 50% correction pretty easily in these markets, and potentially by the end of this month. Will that happen? I do not know. But it's something we need to keep an eye on and watch, because if the markets start to really tumble as we walk into fall and the end of the year, that means the whole global system starting to shut down. With China being one of the main engines of global growth in the world, when they start to falter, the world falters with them. And so we're starting to see a major problem in GDP growth in China, and how it could potentially, normally they're at like 7 to 9%, at least that's what they tell us. They are running into a problem where between the COVID and the supply shortages and the Evergrande problem, which I'll go into shortly, this is driving China's GDP down to almost zero. Evergrande is 2% of their GDP alone, and it's in total bankruptcy at this point and basically defaulting on loans, and it's a mess. it's not just one company, it's a major company with a huge umbrella with thousands of parts and pieces underneath it, and all of these properties have to be either dealt with so they can get them to the customer so that they can fulfill these contracts or whatever. And they're not getting, they're like 300 billion plus in the whole, and this is like 2% of China's GDP. So that's going to weigh on them tremendously as we watch this collapse. And that's going to affect everybody or across the globe because this will ripple through the whole property sectors. Because every bank or any investment group that's in this is going to be affected one way or the other. So also you can see that they're having a major energy supply problem in China also, along with the UK. And so this is something I've been trying to explain, is that we're starting to see major problems with not necessarily fuel and energy in itself, but the delivery systems are antiquated and failing us. And another problem is the UK and the energy crisis in the UK, along with other countries, is going to affect everybody on the globe, because as your prices rise, as people can't find fuel, they can't run their businesses. China actually is shutting down manufacturing and other companies because they don't have the fuel supplies to give their manufacturing sector, because they have to divert the energy to the population. So there's literally shutting down companies. And so this is going to affect the growth of China. This is going to affect the growth of the UK. This is going to affect everybody as we move forward, because nobody can find parts, pieces of things they need. Shelves are going to start to be lacking in finding products that you want. You may have to use alternatives or substitutes for things that you normally would get. So just keep an eye on all these things. They are all working hand in hand to create a global crisis of beyond anything that we've ever seen in the history of mankind, I believe. And so as we walk into this month, and I'm not sure that it will crash by this month, but I believe that we start to see enough bad news. It only takes one major event to rock the markets. So, it could even be a major earthquake. And we're seeing some of that going on too, between the volcanoes and earthquakes. These are affecting communities, and this is affecting the whole globe. So let's keep an eye on everything. There's much more out here to look at. I'm just showing you some of the things I believe that are going to affect us as we move into this month of October, how I believe the markets are going to be affected. One of the biggest cogs I think that could fall is that we could see the debt ceiling not be passed, and we could go into a default or a potential non-payment, and that would be a downgrade in the United States, and that would then affect the dollar tremendously and the global economy tremendously, as we're hitting potential Bitcoin crash at the same time. And we're seeing that the government basically is going to run out of money by the end of this month if they can't figure this out. You could potentially see a potential partial shutdown of the government, which would then, eliminate a lot of jobs. It could also impact people's payrolls, Social Security. They may not be able to pay some of these payments, unemployment, some other things. So this could ripple through the economy fairly quickly. And like I said, we've already talked about in September how they stopped the moratorium on rental properties and mortgages and things like that, and how these people are going to have to pay these large sums of money back. And so there's just so many different components that are affecting us tremendously. I've said we're going to see a 30 to 50% correction once it's done. But there are actual experts out here, they're predicting this to basically fall out to even potentially 80%. And at a 35,000 Dow, you can do the math and you can determine where that's going to end up. God bless everybody. Keep your oil in your lamp. If you don't have oil in your lamp, go get it ready, because the game is on and we are in the last 6 years, and you need to figure out how to get through the madness as best possible. How much oil do you need? I don't know. Will you have enough? I don't know. Is it through faith? Yes. And so if you have some oil and you believe that this is biblical and God is in control, then maybe God will keep an eye out for you and protect you. But I always figure that we should have a little more in case someone else needs some help as things break apart, and there are good people out there that we can help. So please prep yourself and prep to help others, and pray for the people that are struggling. As you may be in a quiet place and being insulated right now, there's a lot of people out here that aren't. So please think of them and realize that this is going to get interesting as we move forward. God bless everybody. Have a great day and be safe.